Hello all and welcome back. There is a stock that is extremely trendy right now. It's called FNGR and it's actually backed by FingerMotion is the company behind this one. You will see here a massive increase in its stock price yesterday, about 93%, and today in the pre-market is also up 21%. So what's up with this one? I want to take a look at its financials and see what is going on here. Why is this up so much? This is the 1 week chart, as you'll see. Back in September 23rd, this was actually about 66 cents over here. Then it kept climbing and climbing, and over here, September 29th, it was sitting at 1.85 at the end of the market day. And then it actually had a massive increase, a massive climb in its basically upcoming days, with every day being higher and higher, and yesterday it was up 100%. If you take a look at its 1 year low, we are actually up almost 1,000% from that 1 year low, which is insane. And for the 50-day average, we are up almost 500%. So this one is clearly trending. But what's up with this company? It's a telecom services one, and if we use our tool here and go back to our profile, company profile, you will see that this is a mobile data specialist company, provides mobile payment and recharge platform solutions in China. And it's obviously really trending right now, and it's a very small company, yet it's moving precipitously, tremendously right now. A pretty recent IPO too. Now, what is happening with this one? I wanted to talk about its financials and also point something that people may have missed here. As you will see again, this is deeply trending, and you're going to be having a lot of posts on StockTwits today as well. I basically saw like 200 posts or so in the last few hours, so it's being talked about quite significantly, quite a lot. Now, if you go here, you will see that the stock market, the market chart pretty much has been basically level till something happened. And I do have an article here that is looking into FingerMotion's recent short interest. And you will see here that the short percentage of float has fallen 44% since its last report. So at some point, the company had a 44% pretty much short interest, which is exquisitely high, and now it's down to less than 1% actually. As you'll see here, the company recently reported that it has 12,000 shares sold short, and if you use our tool here, you will see that the total outstanding shares are about 42 million. So basically, there is almost nothing being held short. It's a very little being held short right now. After it looks like basically everybody covered, all sorts covered here, and it is like 0.05% of regular shares that are available for trading. So this means that we don't have a very high percentage of the float of the company being held short right now, which means that there is not an opportunity for a short squeeze because there's just not enough short interest right now. However, this is problematic for somebody who is playing this for the long-term investment or the long-term run, I should say, or I should say the short-term run even. So if you are actually taking this for a long, potentially, basically having a fear of missing out this insane run, I would be very cautious here, because after today's day, today we're having futures basically being super green right now, and so it's very likely that we're gonna be seeing a green move again with this one. But I do think that in the upcoming days, just because there is so little short interest right now, I really feel that with the price having shot up so much, like 1,000%, I really feel that a lot of people are gonna be shorting this one, so they're gonna be selling short, bringing and actually putting selling pressure to the stock, and I think it's going to eventually go down significantly. So you should be paying attention to this one. Now, you never know what's going to be happening in the markets, but yeah, the fact that the float is actually so little sorted right now of that is currently happening. I'm really scared about people potentially holding this long. This can be a pretty big issue here. So in terms of the company financials, things are looking terrible here in terms of the price to earnings ratio, solidly in the negative. Same thing with the price to free cash flow, again, solidly in the negative. This is a small company though, and take a look at these outstanding shares. The company has been basically funding themselves through new shares. They have been issuing more and more shares, trying to get to new shareholders and basically make money out of this one, because they have no other ways. They're not making money. from their operations, that is. And in terms of the revenue has been growing, but remember the company started at nearly zero over here, and so they are almost at 24 million or so over here. So you see this kind of insane increase, but they started from almost zero, so this is why. And you will also see here that the company's returns are pretty much terrible in the margins because they are losing money, of course. Now, if we take it down to the income statement over here, you will see that the company has been increasing, what I told you, like 23 million right now. They have been increasing the revenue, yet their net income has been still in negative territory, so they are still losing money. Now, that doesn't mean that they're a horrible company, but it does mean that they are a super risky company to invest in. And with the price of the stock being 1,000% higher, this probably points to a company that is extremely overvalued for what it is right now, and it's not even making money. And in terms of the balance sheet, the usual story, the only way to make money, additional paid in capital, basically, is diluting shareholders. And I'm pretty sure they will keep doing that, especially if the price of the stock keeps climbing, because that's the only thing that makes sense for the board. In terms of the total equity, again, it's about 5 million right now. Now, if you take a look at the cash flow statement over here, you will see that the operating cash flow, again, solidly in negative territory. And when you actually account for the capital expenditures, you are looking at the free cash flow that is about 6 million in the negative over here, and basically keeps growing in the negative territory as well. So things are not looking really great for the company. Now, again, this may not be a horrible company, and it could grow to be a nice company that's actually generating profit. But for somebody who would want to potentially get some of this company, get some stock of this company, one of the core metrics that you would want to be looking at, because again, they don't have any gains right now, so you could be looking at the EBITDA or the price to sales ratio, for example, which is 12 over here, and it's much higher than what you would like it to be. Still lower than the previous years, but still high compared to other opportunities, so you'd probably want this to be near 1 or 2 or 3 or something of that sort. Now, we can take a look at our stock evaluation tool next and see what this potentially will give us in terms of a price to buy this stock. I'm curious, actually, with this being 1,000% higher, what does that give us? Now, again, if you take a look at the stock evaluation tool, you will see a story of negatives here, as expected. The revenue growth has been growing insanely, but at some point, you are looking at it kind of stalling a little bit. Now, 16 million to 22 million, this is 37%. Previous years was like 200, 500. That's because they were growing from 1 million. And so that made sense. So right now, the growth has been lessened, and that does make sense. So I'm going to go still rather high, 10, 15, and 20. Now, the problem, the big issue here, net income margin is always negative. So what do? You have to assume marginal profitability. There is no other way. Otherwise, you won't be getting something meaningful out of this. So you already know that you have tons of risk here because you are assuming profitability when the company is deeply in the red, pretty much. Now, free cash flow margin, again, the same story over here. You cannot really have a specific margin because, again, you are looking at negative free cash flows and negative net income over here. And so the free cash flow margin that I'm going to use is something that is rather typical for most companies and a little bit more conservative, actually, as well. Now, annual return, I will go for 13% is what I want to be making. You could go for more for this one, because it's very risky, but I suspect that we're going to get a very low value already. So let's actually hit calculate and let's see what we're getting here. Yeah, as expected, this is at most like 30 cents, maybe 50 cents or something of that sort, if the company achieves marginal profitability. And right now we are at 650 and growing and climbing. So it's going to be more than 7 probably this day. And so this is again a story of a trendy stock that has had a recent short squeeze pretty much, and it keeps growing higher because of people fear of missing out and pretty much flocking around the stock for a while till it starts dropping again because it's extremely overvalued. So it's currently acting as a meme company, again based on the short interest, but again be super aware of the fact that the short interest right now is close to 0, and so 0% that is, as you see. And so this can actually mean that we can have the stock price go down very hardly. So be mindful of this one if you are potentially thinking of playing the game of trading this one for the short term. It's an exquisitely risky one, especially with the short interest so low right now. It can really fall off a cliff. Now, yeah, I hope this was interesting for you. Definitely not a company to own for the long run, but a company to trade, then maybe, just maybe, this one is a company to trade short in terms of actually buying it instead of actually buying it. Maybe not today, because again the markets are gonna be climbing. Right now it's actually more than 8. But I would be super, super careful. And the moment this actually starts dropping a little bit, it can really, really drop. So it may be an interesting short opportunity. Thank you for watching, guys. I hope you enjoyed this video. If you did enjoy this one, remember to leave a like and subscribe. And also remember that you can always become a patron and gain access to our tool here. Links in the description box below this video. And in the meantime, take a watch at this video that I made earlier, and I'm discussing Apple and pretty much taking a deep dive into the company's financials, seeing whether this is a good buy right now or not. And thank you again. I'll see you soon. Bye-bye.